Coming up, Telstra planning to go hard on AI, investors on US inflation watch, and the Australian share market reverses its early gains. All the details next. Hello, it is your daily 10-minute business and finance news wrap for this Wednesday, the 15th of January 2025. The Australian share market fell today by 0.2%. Francesco De Stradis from Ord Minnett will have the details in a few moments, including his opportunities for investors. But first to Telstra, which is pushing ahead with a huge investment in artificial intelligence. It's proposing to form a joint venture with global IT company Accenture, which specialises in AI. The 7-year project would see the new technology applied throughout its business. It'll build data and streamline processes behind the scenes as it looks to cut costs through greater efficiencies while also improving customer experience. To explain what that all means, I spoke with Paul Budde, a telecommunications analyst. Paul, first of all, just how significant is this investment by Telstra?
It is a very significant investment, Ricardo, because, AI is absolutely revolutionizing the world. It's an enormous game changer for business. So you have to be involved in that. You have to start integrating artificial intelligence throughout your systems, throughout your applications. A massive job, but it has to be done because that's where everybody is moving in that direction.
What do we know about the way this will assist Telstra in its operations? What have they told us how AI will now help? And what about what you think?
Yes, definitely what they are doing is making their systems and applications more efficient, more responsive, better for decision-making applications by integrating an enormous amount of data. The company, of course, has an enormous amount of data on what's happening with the customers, what's happening within their system, all sorts of things that are important. However, these data sets need to be trained in such a way that they can be used to make predictions, to make systems more efficient, to provide answers to customers, rather than, for example, Ricardo, if you now have an error and you go into Google and say, I've got this error, then it comes back with a whole list of things what you have to do. The future will actually be, you've got an error, you say, this is my error, the system then automatically fixes the error, because it knows the whole sort of information behind it. So that is actually the sort of things that we can expect from an integration of AI in all of the Telstra systems and applications.
What do you think the consumer will see as a result?
Definitely a far more efficient and effective response from Telstra on questions, on errors, on problems that they have with their internet or with their broadband or whatever. So most of these questions that customers have, customer service questions, they can be actually automated and can be looked after, not just provide an answer, but provide actually the solution for a customer. So that is a major development that can be expected if Telstra has all of these systems right. It's an enormous job. It takes enormous amount of time, but once they've got it right, it will be much more efficient and better for us, the consumers, and particularly also, of course, businesses.
And what has Telstra said about the implication for jobs? We've often been told the story by many companies, particularly when we talk about AI, that AI will create new jobs, but isn't there the fear that AI will also eliminate some others? On the balance, will there be more jobs or fewer, do you think?
I think it's a bit nuanced. Of course, initially, that's why they go to Accenture. They need experts, So rather than having these people all in-house, they're using Accenture to do that. So that's one part of the story. The second part of the story is, of course, that these AI systems are going to be far more efficient, far more effective. So there's no way in the world that you create more jobs, in particular in the area of the efficiency that Telstra wants to create. On the sideline, obviously, a lot of new activities are going to happen with AI that requires people that understand it, have knowledge, have learned about it over the next couple of years to actually be part of this new AI economy that is going to develop as well. So the offshoot will be absolutely more jobs, but not necessarily within Telstra itself.
Do you think there will be big job cuts at Telstra as a result of this?
there's no way in the world that Telstra can compete in its current format. It's competing with the big digital companies, and they have far less staff per revenue or per profit, whatever you want to look at it. So, Telstra will have to be more leaner and meaner, than it is now. So there's no way in the world that in the current format, where they're basically an infrastructure provider, that in that situation, cost cutting will continue to be the major part. They don't get a lot of extra revenue. The profits are continuously under pressure. So the only way out is cost cutting. And that also, of course, includes, staff.
That's telecommunications analyst Paul Budde there.
Now, Market Day on the SBS On The Money podcast.
Well, the Australian share market started strongly, but then turned around lunchtime. The S&P ASX 200 closing down 0.2%. For more on the day's market action, including his take on Telstra's AI investment, I spoke with Francesco De Stradis, an investment advisor at Ord Minnett. Francesco, the market opened stronger, but there was a bit of a turnaround at lunchtime with the market falling into negative territory. Do we know what's happened today?
Yeah, well, earlier, like last night, we saw the Dow Jones up. It was up about 0.5%. The S&P 500 was up about 0.1%, but the Nasdaq, the tech-focused Nasdaq, was down about 0.25%. Now, our market's done something pretty similar. When you look at the sectors, consumer sector, banking sector, resources sector were higher in the early trade, and tech stocks, telecommunications and healthcare were off a bit lower. So sort of followed a similar pattern. We were up about 0.25%, but in the afternoon we've started to fall away. Looks like it's following the same pattern as the S&P 500 futures is doing. I think there might be some concerns around what might happen with this CPI number that's coming out tonight.
Okay, let's go into more detail. Those inflation numbers, what's the market expecting, and just how important will these be?
Well, consensus numbers are expecting about 2.9% for the December CPI. That's up on where November numbers were at 2.7%. So, and still well above the Fed Reserve's target of 2%. So I think what we're seeing now is we're seeing maybe the inflation number flattening out. If it's higher than that, get a bit concerned, because I think where rates are at the moment, we might see the Fed pause. Where there were expectations they might continue to cut. If that number comes in at 3% or above, we may even expect to see a slight rise in rates going forward. And this will have a bit of an impact, importantly, on the equities market as well, because the global equity markets are trading at probably a pretty much overvalued situation at the moment. And I would expect them to consolidate at these levels and trade pretty much sideways until we go into the reporting season next month. But if those inflation numbers start to creep up, we might see rates rise, and therefore the markets might come up for a little bit more.
Lots of geopolitical news about impacting the oil price. Why and how?
Yeah, look, we've seen the oil price over recent weeks rise from about sort of the low 70s to mid 70s to just above $80. I think a lot of that has got to do with, as you mentioned, the geopolitical environment. We might start to see some more, impositions placed upon the Russian distribution of oil. We're starting to see oil consumers that normally would buy off Russia starting to buy off other OPEC nations as well. The US, the US stockpiles are starting to decline as well. So that's all factored into the oil price rising up to the $80 a barrel mark. We're still seeing conflict in the Middle East as well. I was always thought that the oil price, in the 70s was a bit low anyway. So we're probably a fair value, I would suspect, with the oil price. Where it goes from here will determine, obviously, with Trump coming in and what impositions he places on not only the Russians, but also the Middle East.
Earlier in the podcast, we spoke about the new push by Telstra into AI and this big proposed joint venture with Accenture. Any other company news catching your attention today?
Yeah, look, just on that Telstra thing, I think, obviously if they get it right, there's some good growth in Telstra. Telstra was, traditionally, when it first floated, seen as an income stock, but I think we might start to see some growth out of that. It's a big investment. They've got to get it right, but all things being equal, I think it's a positive thing for Telstra. Other areas of the market today, Aristocrats put out a press release. They're going to a trade show in Barcelona towards the end of the month, and they're announcing some new gaming content and some new direction with the company, and that's, I think, a positive for Aristocrat. It's a stock that Ord Minnett's had on our portfolios for some time, and we'll continue to hold there at these if it continues to make these sort of moves towards growth as well. One that's been in the press, I suppose, in the media for a little while now is Star Entertainment. Obviously, it's going to be in the media spotlight for a little while. There's a number of things that could happen there. Trading out of trouble is one thing, breaking up is another, or just a whole takeover is another. We've seen a Chinese national starting to acquire some stock and become a substantial shareholder. I think it's a bit hard to indicate whether they're going to make a takeover play because there's so many moving parts there. Personally, I'd like to see them try and trade out of trouble. Breaking it up would mean that there's a lot of smaller parts there. I think for existing shareholders, trading out would be probably the most optimum outcome there. Considering they've lost a fair bit of capital, I think the risk is worth it. Other areas of the market, Guzman and Gomez, or Gomez and Guzman, I forget which way that goes. The retail fast food outlet, the share price of that's gained a bit of traction. Personally, I think it's a little bit overvalued, or a fair bit overvalued, actually. We've seen another broker upgrade their recommendations on it overnight. So there's a little bit of confidence there in their expansion plans and their growth. There's a little bit more confidence. Personally, I think it's already priced in to the stock, but there could be more growth there as well.
You can always call it GYG, never forget and never mix it up,
GYG,
right?
and not even get it mixed up.
Finally, Francesco, where do you see the opportunities for investors at the moment?
Yeah, look, my long-term theme has been copper for some time, and I don't think that's changed. I think, with the transition to more and more renewable energy around the world, electricity networks need to be upgraded, and that will take a lot of copper. So I still think copper is a long-term play in the markets. Post the US election and the Trump inauguration, we're seeing a lot more business confidence, particularly at the smaller end of the market, small to medium-sized enterprises. This will potentially translate into confidence at the bigger end of the market as well. It'll be interesting to see what comments come out of the larger companies during the reporting season as well. That tends to put a bit of confidence into the market, even though it is a bit overvalued at the moment. Cybersecurity is another area that we like at Ord Minnett. It's hard to get opportunities there, but where you do see opportunities, I think there's a future in that. And then on the flip side, sometimes it's worth noting to look at the negatives in the market. I think our banking sector has been well overvalued for some time, and I think shareholders would be quite within their rights to start taking a little bit off the table in that area as well.
That is Francesco De Stradis from Ord Minnett.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.